Greetings everyone. Silver spot price is definitely something many of us want to be able to forecast accurately. Today, I thought it would be interesting to forecast the spot price of silver 3 months from now, August 12, 2026, through the lens of an Alan Greenspan style of economics. Please note that while I am not your financial advisor, my educational history does include a bachelor's in economics. Based on the information available to me, I expect spot silver to settle within a price band of $75 to $83 per ounce in 3 months. Applying the framework of Alan Greenspan's economic philosophy requires looking past short-term market noise. This analysis evaluates fundamental changes in industrial asset demand, the cost of holding unyielding assets, and the containment of speculative market behavior. Following a volatile period that saw silver pull back from historic peaks, the current trading price of $66.57 per ounce reflects an asset firming a structural base. I see 3 pillars of a Greenspan-Style silver model. First, we must track real yields and the opportunity cost of capital. Greenspan's monetary evaluation heavily weighed the real yield of sovereign debt when determining the fair value of alternative assets. Recent soft employment data has cooled expectations for aggressive monetary tightening. Over the next 90 days, a minor contraction in real yields on the 10-year Treasury is anticipated. This compression lowers the hurdle rate for holding non-yielding hard assets. Consequently, capital is gently nudged back into precious metals, supporting a price expansion toward the $75 to $83 target window. The second pillar of this approach is that long-term commodity values are anchored by actual industrial consumption, rather than paper speculation. The market is navigating its 6th consecutive year of primary supply deficits, leaving physical inventories thin. Massive green infrastructure initiatives, specifically solar technology, electric vehicle manufacturing, and AI computing hardware, require silver's high conductivity. This non-negotiable consumer demand prevents silver from crashing to historical lows. It sets a strong technical floor around $60 per ounce. Third, we must manage irrational exuberance and market stability. Greenspan famously noted that periods of excessive enthusiasm distort asset prices away from baseline realities. The early year spike toward triple digits was driven by market volatility and institutional fears. The recent cooling down to the mid-$60s represents an orderly removal of speculative leverage. As global monetary authorities provide clearer forward guidance, panic-driven buying is replaced by calculated allocations. This shift restricts rapid, unbacked price jumps, stabilizing the asset within a manageable, fundamentally supported range. A quantitative 3-month forecast model, the baseline objective $75-$83, supported by institutional research from JP Morgan and global analyst surveys. It reflects balanced physical consumption paired with normalized interest rate expectations. The downside floor $60. Guarded by persistent extraction limits and the commercial demand generated by green tech capex, the speculative ceiling $95, unlikely to be breached within 90 days unless energy bottlenecks or geopolitical events trigger massive safe haven purchasing. Let me know your thoughts in the comments and be sure to like and subscribe. Wherever, whenever you are, have an amazing day.